Yo, what is good, YouTube? Out the Mud Traders here, and this time I'm gonna give a more detailed description on how I break the charts down and how I see what I need to see to take the trades that I take. So I use breaker structures, liquidity sweeps, smart money concept. That's pretty much my strategy. So right now I'm gonna show you guys exactly what I do and how I mark out my how I find the trades that I find to catch the sells or the buys. So pretty much price only moves three ways. It moves up, down, or sideways. Up is obviously an uptrend, down is a downtrend, and sideways is just consolidation. That's the only thing that we don't trade. Consolidation is exactly what it sounds like. The price is consolidating after either a huge move up or a huge move down. It's taking a breather. It's indecisive. It doesn't know what the next move is gonna be, so it just consolidates and just like a barcode. So you entering in consolidation. This is pretty much what that looks like this. No highs broken. Well, the low might get broken, the high might get broken, the low might get broken, but this is consolidating right here. You do not want to trade this range right here. This is ugly. So now I'm gonna show you what a higher time frame looks like. This is what it looks like. It's up, down, up, down, up. So now these are considered this breaker structure. I'm just gonna use this right now. This is a breaker structure. That's what I'm gonna use as a breaker structure right here. So this pretty much, actually I'm gonna change that and I'm gonna put it exactly how I do it. So this is your breaker structure. So now price is gonna come somewhere in here. There is a zone somewhere in here that you have to learn to identify with, and now you're able to catch this next. Oh God, no, sorry. This is how you're able to catch this next breaker structure here. And the same thing continues. Boom, this is gonna come back down here and continue back up. Same thing again. Another breaker structure right here. And then again, there's another zone somewhere here that's gonna push price back up this way. So this is what a higher time frame uptrend looks like. So now I'm going to show you a downtrend. So now this is when price wants to go down. When it's down, it's the same concept going down. It's just a different so now here we go. Boom. A back up to the zone, boom, sell off again. Back up to the zone, boom, sell off again. So this is the exact way the downtrend works. The same way as the uptrend. Both the same things. So you see here, there was a structure break here. Now this is, let's see, downtrend, right? Same thing again here, downtrend. And the same thing applies here. There's a zone somewhere in here that you are gonna have to learn how to spot and find it. Take your entry here and come back. And now if you enter here on a higher time frame, you're gonna hold this trade and you're gonna target the next low. So this move broke this low. So now this low is next to target. So now once this price comes back up into here, you're looking for a rejection out of this zone to target the next low. And the same thing here. This low was broken. Now we're gonna target this low here. And this is just a textbook. This is just a textbook demonstration of how this looks. This does not look like this on the chart per se. It is like this, but it's not gonna be as clear as it is because the market makers are not gonna just give it to you that easy. They're not just gonna make this strategy work 99% of the time. No, we have losses too, but this is the idea of the strategy. This is what you're looking for. So even through all of the nonsense, this is what you're looking for. So now on a lower time frame, an uptrend can look like this. It can look like this. These are all lower. This is all lower time frame. So now the same thing is still happening, right? The same thing is still happening. It's just a difference. It's a little bit more complex on a lower time frame. So somewhere down here, there's a zone, right? So now these lows right here, this is not price dropping. This is just liquidity right here. So there is some liquidity that needs to be swept for this to fuel this next move up. Now, if you're on a higher time frame, there's liquidity, but it's not. It's going to be easier for you to spot these moves on a higher time frame because there's less noise. There's less candles. There's less noise for you to, less things to distract you. So the same thing happens on a downtrend. Same thing. We go up, come down, right? Come up, come down, break this right here, come down, do here, push back up to still continue down. So again, the same thing is happening. The same thing is happening on this one. It just looks different. So like I said, this right here, actually, I'm not gonna make it that complex. I'm just gonna put it, let's say these are equal highs, right? So equal highs will form on lower time frames. This is liquidity right here, and there's a zone somewhere in here that you're gonna put your orders in, put your stop loss above here. This is exactly what I do. I'll enter at the top of this box, put my stop loss right here, and I will target this low. I'm not targeting nothing down here because this is not, I'm not targeting anything down here. My target is here. My TP is the next low. So anything after this is just runners. So if I put in 5 positions here, up here, I'm gonna close 4 of them here and let one of them run. Or you can close 2 and let 2 run, whatever you wanna do, but this is the target. Anything past this target is extras. That's extra. This right here is guaranteed money right here. Not guaranteed because the trade still may go against you, but if you're in the trade, your trade lines up, this is where you want to target. This is your finish line, not down here. You holding this trade for down here, it could blow past here, right, and reverse on you. So now you would have lost, you would have had your profit right here if you would have been content with what you would have made for this trade and move on to the next trade. Or you could hold it, be greedy, not follow the rules, and now you're holding, and then price just does this. Now you're done. Now everything's gone. Now you done lost money and you lost the profit. So that's not what we try to do. We try to find targets. Same thing here. We try to find targets and target those targets, and we're comfortable with what we make for that, and let that be and go move on to the next trade. This is the exact way how these trades look. This is exact textbook how my trades look. The price action isn't this clean. It doesn't look this simple. These ups, highs, and lows are not this easy to spot, but these trades are exactly what I take. So this is the exact breakdown. So now I'm gonna show you guys, this is a 1 hour time frame. So now what I just showed you guys is, this is gold. So now look. All right, so I'm gonna, look. This structure right here was broken, right? This is the 1 hour time frame. So now this is the bottom of that, boom. Look at this. Breaker structure, right? That's what I just showed you for the downtrend. You break structure. Now it's gonna come back up and find a zone and then drop again, right? So now look what we do. We came back up, right? So now there's no zone, right? This is what I said. It's not always textbook. So now here's the zone right here, right? This is the hourly zone that I would have waited for price to come back to. But as you see, we didn't come back to this area, and price still broke structure. So now the only difference is, right, now here's where it gets a little complex, because now we go to the 4-hour time frame, right? Since the 1 hour isn't so clear, now I'm going to show you exactly what happened. So now here is the zone. So that's what I said. You have to find these zones and know which zone and which zone is not valid zone. So the same thing I just showed you. Look, go up, come down, break structure. Go back up to a zone, come back down, break structure. This is the same thing that just happened right now. Went back up, came down in a rush, broke structure. Now these are internal highs right here. Boom, boom, boom. Internal highs. Coming back up. We're not bullish. This is just retracing. This is pullback, because the main price is bearish. This is a bearish structure right here. So this right here might fake you out and make you go long. So you could have seen this right here, had this zone marked up to go long up to here, and you would have got stopped out because this overall trend is bearish. So now came back up here, and what does it do? Come right back down and break structure. So it's the same thing over and over and over again. You just have to get good at noticing these things live. Like, you know, hindsight is always 20/20, but it's a different ball game when you're live and you're trading and you see these things happen during live session trading. That's the hard part. Anybody can mark up charts. If I gave my little sister, who's, I don't know, 14, 15, she can easily see that this is going up, down, up, down. That's obvious. But it's knowing when to get in and when to get out. Knowing that it's bearish, knowing that it's bullish. Trusting what you have studied, back testing it over and over, and then it'll eventually become easy for you, like it did for me. I didn't know anything about this. I learned this strategy just like everybody else, and then after I learned it, it just I didn't go say it just clicked, because it didn't just click. It took me a long time to actually understand the fundamentals of this right here. Because like I said, this looks like this, broken down like this with these lines, and I'm breaking it down. But live, the market does not look this easy. So now it just so happened that I took some trades on gold this week. So I'm going to show you, again, we are bearish. As you can see, we are bearish. You could draw a trend line from here all the way down, and you see we are bearish. This is a complete bearish trend. If you traded trend lines, you know that once you get the tap on that trend line, if we're bearish, you can definitely play a sell off of this trend line if that's what you do. But I don't trade trend lines, so that's not what I do. But so now I'm gonna show you some trades that I took. So now right here, like I said, the same thing. Now we're on a bearish trend, right? So now look, price went up, came down, went up, broke structure. Now we played around. This is consolidation right here. This is that consolidation I was talking about. It's consolidating. There's no highs being broken. There's no nothing. So now we shoot back up, right? Now we come back up here. Now this move right here, you see this right here? This is all liquidity left up here. So when price consolidates, trading the way I trade, this right here is liquidity. So price is gonna either make a move in either direction. So you see how it spiked down and it swept this liquidity. It didn't take the liquidity, it just swept it. So now I would mark this. I will mark this as a liquidity sweep. So this is a liquidity sweep right here. So now once price came down here, I know that it's gonna go reverse and try to take out the buy side liquidity, which is all right here. So price swept the sell side liquidity and buy side liquidity. So now all you have to do, the price is still bearish. Even though this strong move, we are still bearish. So now I'm gonna show you guys exactly what I did. So now boom, bearish again, broke structure again. Boom, came up, broke structure again. So now is where I took my trade. So now here, I'm gonna do it off the line I made. Boom, right? This is a 1 hour break of structure down. So now this is my zone that I'm looking for. So now news came out on, we had CPI news. So CPI news pushed us from down here all the way up into this zone. So I didn't enter on this zone because this was live with news. So I didn't take this. So now I'm gonna show you on the 5 minute what I did. So now I dropped down time frames. As you can see, the price looks clear on this time frame. up, down, break structure, up, down. Now, this is what I was saying earlier. When you come down to these 5 minutes intraday time frames, price looks crazy. This looks like an uptrend completely. But the 5 minute is uptrending, but the higher time frame is bearish. So now this is what I saw. We tapped into my zone. This is my 1 hour zone right here. So now we tapped into my zone. There was liquidity right here, plus a zone. So this is not considered a breaker structure. Let me go back to the 1 hour. This right here is not considered a breaker structure. I knew that once we came down here, we left this up here. So we would have to come back up here, take out this buy side liquidity, tap into my zone, and then I would look for sales. I could have entered up here, but my stop loss would have been pretty big. So I don't really like a stop loss this big. And I don't trade higher time frames. I mark up the higher time frame, but I trade intraday, 15 minute, 5 minute. Those are my lower time frame trades. So this didn't look appealing to me. So now we swept liquidity here, tapped into my zone. So now all I'm doing, now we done tapped into my zone and rejected it. That's my first confirmation. Now my second confirmation is this right here. This change of character. I want to see price. Price will let you know what it's gonna go, what it's gonna do. It will tell you what it is going to do every time. If you force it, you will be wrong 99% of the time. But if you let the trade come to you, that chance of you being wrong drops significantly. So here's what happened, right? So now we tapped up in it. This is also news. So the news candle, this is the news candle. This is at 8:30, I think. 8:30. Whatever time it was, I don't remember exactly what time, but this is the news candle. It spiked us up into there, rejected it. So now, first confluence, second confluence is here, right? This is my second confluence right here. So now, change of character was strong, left this liquidity here. So now, this liquidity also, buy side liquidity was here. This way you see these dollar signs, that's buy side liquidity. That's what that mark is. So now I know that we're gonna have to come back up into the zone that pushed the change of character, which is this right here. So this zone, I'm looking for a pullback and a rejection out of this zone. So this is my first confluence. This is my second confluence. My third confluence is the pullback into my zone. Well, the third confluence is actually the liquidity. So I see liquidity, right? Before these candles happen, I see this liquidity right here. We're not just gonna fall from here. We can, but that's not likely. So now, well, it's not likely for my setup. Price can always do what it want to do, but that's not likely. That's not the likelihood of my setup. That doesn't happen. It pulls back, or and I get my entry, and then I go from there. But sometimes price just keep going, and it just does whatever the hell it want to do. So I got my confirmation right here. So first confluence, second confluence, third confluence, liquidity. My fourth confluence is coming back into this zone, tapping into it and rejecting it, which is what you see these candles do right here. So as you can see, I'll move this over a little bit. These candles came into here and rejected it. So now I enter at the close of these candles, and I have my stop loss above the highs, because if price came back anywhere up here, this would invalidate my setup. Price could come up here and wick and come back down, but I'll just get stopped out. That's the only thing. So I keep my stop loss above the most recent candle high. So now all I did was target this right here. So the same thing on the 1 minute, 5 minute, 15 minute, 1 hour is all breaker structure. So now all I did was target this on a 5 minute could be considered a structure break. So now this broke structure here, all it did was come back down, breaking it, after breaking it, retrace back up to this area. Now all I'm doing is targeting this next area right here. I could have targeted, there was a zone right here that I could have targeted, but I just wanted to, I was playing it safe, I wasn't trying to hit a home run, just a quick in and out trade. So that's what that was. So now this was the second trade that I took. So now we broke structure here, right? So there was a zone here and liquidity that was here. I don't have it marked up. I deleted it after I took this trade. So now when price came here, this zone pushed us back up, but we still had we still had this zone right here. As you can see on the 1 hour, if you zoom out and look to your left, there's always a point of interest to the left. That's all you gotta do is look to your left. If you're not unsure of a trade or don't know where it's gonna go, where it might fall, just look left. That's it. So I look left, now I see a zone right here. So this zone is where price could potentially wanna fall to, because that zone is not, it hasn't been mitigated yet. It's just an empty zone. So now when price is near it, I'm expecting price to enter it. So that's exactly what we did. So now here again, now we broke structure on the 5 minute. Again, broke structure on the 5 minute, came down here. Broke structure again here. This is another 5 minute break of structure right here. So now price, look again, my zone, first confluence. Second confluence was the liquidity, right? So now this zone right here pushed price past this break of structure. So now that I see liquidity right here, I know that we're gonna have to come up somewhere and sweep this liquidity. There was no clear change of character here. There was no indication of a change of character like how it normally looks. So that was my first sign that I'm not gonna buy, because this didn't look anything like I wanted to buy from. I liked price to come back into this area. Again, we left liquidity here. If you could see, there was liquidity right here, sell side liquidity, which gave me my confirmation that we might come back up into my zone and want to come back down here into this zone and sweep this liquidity right here. So that's exactly what we did. Liquidity went back up, boom, came into my zone. I entered this trade here, sell position. I entered at the close of these candles, which was right underneath, maybe a half a pip below the actual zone. My stop loss is again above the highs. Well, in this case, there was no previous candle high, but this candle's open right here was what I targeted. I mean, where my stop loss was. So if you would have came anywhere up into here, I would have got stopped out, and the trade probably would have kept going this way. So that's where I have my stop losses at, where I think price, if it does come in this area, my trade's invalid. I don't just have my stop loss, here or here, or, I give my trade room to, do what it wants to do, because I realize when you have a tight stop loss in certain cases, it doesn't work in your favor. So I entered this trade right here, and all I did was just target this same zone. I'm going to post a video right now of this trade playing out. And so yeah, that was that trade, and this is exactly what I do. This is exactly how these trades come to play. And this is, again, this is the same breakdowns right here. This is the foundation of how I trade. This simple right here. This is exactly how it looks. And as you can see, I'm going to show you again. Look at this carefully. Look at this setup right here carefully, because this is similar to what I just did on a 5 minute. Look at this. Came down from a high zone. Boom, 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 boom. Came down. Liquidity grab into my zone, selling. Now, I'm going to show you again here exactly what just happened. Boom, into my zone, came down, back up, came down, back up, down, liquidity, back into my zone, selling. Same thing here, came down, came back up, came back down, went push back up into my zone, selling. liquidity grab, selling, same thing over and over. This is not a hard strategy to learn. It's not easy either, but it's not a hard strategy to learn if you want to learn how to trade and you want to take these trades. So now here is another trade that I had set up. Today's Friday, so this was Thursday night after price done sold off. Came into my zone. Now, as you can see, we came into my zone, swept this liquidity right here, right? Swept this liquidity right here. Came into my zone. Now, like I said, remember what I said. Let me see. Price is gonna push up, come back down. This is exactly what I have on my chart that I just showed you guys. Boom. Now you're gonna see a boom, boom, boom. Right? Now this is what I saw Thursday night. So now Thursday night, I saw this. So now all of this liquidity, even though price came back into my zone, it wicked in here. So I knew that price is gonna wanna come back in here and do what it wants to do. So now, this was late at night. I had this zone marked up, but I couldn't stay up. This was at like, I don't know, 5 o'clock in the morning, 4 o'clock in the morning. I was already knocked out. I tried to stay up till like 3 a.m. to catch it, but it ended up going without me. I fell asleep. But the same thing, if I was up, I would have played this. Same thing. Push up, come back down, liquidity grabs, back into your zone. I would have entered somewhere down here at the close of some of these candles, had my stop loss right here. This is exactly what I would have did. Bam. Oh, shoot, wrong. I would have came through here like this. Boom. And I would have had my TP here. It wouldn't have even been a big trade. I wouldn't have even caught all of these moves, all of this right here. Because this is, like I said, this is not guaranteed. None of this is guaranteed. All I do is target the highs. That's it. Sometimes the trade will go right past your TP and then just spike back down. Literally, it'll come up here, spike. I'm going to show you exactly what I'm talking about too, because it happened today. I caught a, where is it? GBP. Yep. Look what price did. I took this trade this morning. It was in my bed. I'll give a breakdown on this later, but I was in my bed. Took this price. Look, and you see how I have my stop loss? I have my stop loss above these highs. If I would have had it right here, tight, I would have got stopped out, but I give it room to breathe. I done been through enough trades to know that this does not scare me. This little drawdown does not scare me. If the trade is a loss, it's a loss. I could care less. Move on to the next one. That's it. This ain't my strategy. It just, the chart wanted to do whatever it wanted to do. Doesn't mean that my strategy doesn't work. But look, my target was here. Now let's say that gold trade, right, that I just showed you, where I would have had my target, and it still went above it. Now look here, in this example, I have my target here. Price literally came to my smack TP and then boom, reversed immediately. So now what if I'm over here holding, oh no, it's not enough money. I want to hold for a further TP. I want to make more money. Now you done lost all your money because now you done got stopped out. This would have stopped me out. It was a perfect trade, but me being greedy would have got stopped out. So that's why I don't really do the long holding anymore. Experience taught me not to do that anymore, honestly. That wasn't a decision of my own. That was just experience. Like, you know, with the same results, if you're getting good trades with the same results, then something is either right or wrong. So if you're getting bad trades with bad results, then that means something you're doing is wrong. So that's all I did was figure out what the hell I was doing wrong and correct it. So that's exactly what happened. And that's why I don't hold for all of this right here. You could have held for this, because this zone right here, you see, again, I didn't even take this trade. I took one trade today, but just for the YouTube sake, look at this. Again, same zone, boom, another zone. This zone is not a random zone either. This zone pushed price all the way down here. This high pushed price all the way down here. So now clearly this is a strong high. So now when price wants to come back up into it, you could expect it to drop. And that's exactly what happened. Boom, came here, confirmation. Boom, you would have sold here. Another zone right here. You could have entered in that zone, or you could have waited for another confluence put your entry at the close of those candles, and boom, could have targeted this liquidity right here. Like I said, I didn't take this trade because I already made enough trade. I made enough on that one trade this morning. I was done with that trade by 8:30, so I wasn't gonna force it. I wasn't even paying, I wasn't even watching the chart, to be honest. I was, enjoying my day. But yeah, this is what I do over and over, and I'm just gonna keep reposting videos that to show you guys how easy this is. And don't get me wrong, I don't want to say, I'm not saying easy as in, anybody can do it. You can just study it one day and learn it. No, I don't mean that. But I'm saying if you put the time in, to learn this very well can be that easy. This can be just like this. You can play this just like this. Same thing right here. Boom. Buy. Target there. These are all trades. Look at this. Boom. Again. And this is what you see I just did on gold. So all you see is there's no cap in my rap. And you know what I'm saying? There's no lying going on. Same thing. Boom. Same thing. Bam. Another zone here. Boom, boom. Same thing. So thank you guys for watching. My next video will probably be another video breaking down my strategy, or the strategy that I use, and just breaking it down into more fractals so that maybe you can understand it even better, or to show you, different ways to attack these markets. That's all I'm here to do, is just to show you guys what I do, how I do it. You may like it, you may not like it. It may work for you, it may not, but it's here for you to make that decision all on your own. So leave a like, leave a comment, and please subscribe, because again, I'm dropping straight heat. This is all valuable information. This is all useful information. This, I promise you, if you use these techniques, if you study this strategy, look it up, you will see the results. When I study this, the guy that I got it from, all he did was just say, if this is wrong, go prove me right. I mean, if this is wrong, go prove me wrong, because I'm saying that's right. So your job is prove me wrong. So now go prove me wrong. But with this right here, if you don't see this happening in this market, then you need glasses, because this happens over and over. Liquidity grabs, up, sell side, buy side, sell side, buy side. It's just knowing when to enter, when to exit, knowing when to sell, when to buy. That's all it is, just timing. That's all it is, just time. So I will catch you guys on the next one.